Gold is rising this morning as the U.S. dollar slips, with investors continuing to weigh policy uncertainty around tariffs, as well as a potential Russia-Ukraine ceasefire. And we've seen investors pile into gold as a safe haven asset amid all of this uncertainty. Our next guest says gold belongs in everyone's portfolio. Here with more is Robert Haberkorn. He's RJO Futures Senior Market Strategist. Robert, thanks for being here. So why should all investors have some gold there?
Thanks for having me. Well, gold's a hedge against inflation, and while some of the inflation numbers have been coming down as of recently, the thing that's not coming down right now that we're seeing is anything with government spending. I know there's a lot of talk right now on the bill that's moving forward, but we have yet to see what's going to come out of that. And with government spending like it's been over the last few years, and no indication that with it coming down here, gold is a great spot to hedge your assets right now for a weakening dollar.
So how do you see fiscal policy influencing gold prices over the next 12 to 18 months? And given the fact that we have this growing debt crisis right now, is that a bigger upside risk to inflation than the current tariff picture, especially since we've seen some recent signs of relief on that front?
Yeah, the biggest thing is with the deficit spending and treasury yields. Treasury yields continue to move higher here. And while treasury yields are moving higher, the price of gold has gone up and made record highs here at 3,500 an ounce. With yields pushing over 5% and gold still maintaining its upside and going higher here, that's pretty impressive here because gold does not yield interest. And typically in this environment, when there is unknown, safe haven buyers do go to treasury bonds to get that yield. They're doing that, but they're also buying gold at the same time, pushing it to all-time highs. Expect this trend to continue here this year. And into 2026 for gold to continue on a strong path forward in spite of U.S. Treasury yields being high.
So for beginners looking to gain exposure to gold, there are multiple ways to invest, either through physical gold, ETFs, futures trading. What's your preferred approach, and what are the trade-offs between each strategy?
Well, of course, the easiest way is to buy physical gold, but sometimes people are looking for a little more exposure to it, and futures markets are a great way to do that. When you buy a futures contract, you do get leverage, but with leverage does come risk. So I'd recommend speaking to someone about that versus just buying it on your own in a futures trading account. Talk to someone that does manage and help people trade gold futures. Another way to do it is, of course, through ETFs. But what we do on our side of the business is help people buy or sell gold futures via the COMEX. And it just offers a great point of leverage if you're looking for a sizable amount. And you don't have to worry about having all the physical gold, on your person.
So as you find your preferred investing method, how much gold should a typical investor hold? You suggested 5 to 10% for conservative investors, but what factors should drive that allocation higher or lower?
I think 5 to 10% is a good point, but given the situation we're in right now with spending and the deficit here, there's nothing wrong with looking up as high as I think 15% right now. But 5 to 10% generally for a conservative. To even go a little higher up to 15%, I don't think could hurt anybody in this environment.
And gold continues to trade near all-time highs. So is it too late to get in the game? Do you want to buy now or maybe wait for a potential dip?
I hear that question daily, and I've been hearing that question daily for the last 2-3 years. Actually going back to COVID here, but I do think we have higher highs coming in gold, and I do think that the downside is limited right now. The downside being possibly down around the 2,900 level here. We are trading at over 3,200 an ounce right now, but I do think downside is limited for the time being.